In this week's episode of the Stockscores Market Minutes, I'm going to look at the importance of trading with focus, plus my regular weekly market analysis, a couple of stocks for you to consider, and then the trade of the week on AMD. All right, so we're going to start off this week's Market Minutes with a discussion of the importance of trading with focus. You see, the best trades come when you least expect them. Our focus is lowest when we least expect good trades, and therefore it's easy to miss the very best trades because we simply aren't focused. And so what is important is when the market seems boring or difficult, the point when you really feel like walking away from your trading screen, that is the time to get focused because you are likely on the cusp of some of the best trading opportunities. We don't want to react to what has been happening. We want to predict what will happen, and the prediction comes when our focus is lowest. All right, let's get on to this week's analysis, starting off with the US markets. Here we have a chart of the S&P 500 on a short-term basis, 30-day, 60-minute. And what I want to really highlight is a couple of things. First of all, there was a bounce off support there, which was good. We had that pretty dramatic sell-off early in the week. We held support, we rallied back, but we failed to move back to the resistance levels and instead made a falling top and moved down on Friday toward that support again. That's a pretty bearish signal because falling tops are a sign of pessimism. If we break down through that support level next week, I think we could see much more weakness. Moving along to the longer term chart, you can see that we also have something here called a bearish engulfing candle. You can see that the high of the week is higher than the previous week and the low of the week is lower than the previous week. And the result is that this red candle sort of takes in the green candle before it. And that's a bearish sign. Essentially what happened is early in the week, we had some strength. It looked like we were going to try to move up toward resistance, but we failed to make that move and instead reversed. That means the sellers came in with power, with motivation. They closed the week on the lows. That is a negative for next week. We still have to get down through this support level, but we are at risk of doing so, so we'll have to keep an eye out on that. It's not really bad until we break down through that support level, but that's something to watch for next week. On to the Russell 2000. You can see there another bearish engulfing candle. We've got the high, we've got a lower high, and we are now really right at that long-term support level. If we get a strong close down below that, I think we are destined for much more selling pressure, and so all investors should be cautious and watch for that next week. On to the Canadian markets, starting us off with the TSX 60 short-term chart. Similar situation, tried to rally back, failed, closed the week with a lot of weakness, in this case to new lows for the month, and therefore that is a negative signal. Looking at the longer term chart, you can see the breakdown from low volatility that we had. We had that low volatility there, that's a pennant pattern. The trend into the pennant was down, therefore we expect the trend out of the pennant to be down, and that's what we got this week with that downward move. Do we now break through that support level? If we do, there's a long distance to go before we hit stronger support, and so that could mean some real downward price action. Again, I don't want to say the sky is falling until we break that support level, but it certainly feels like we might next week. On to the TSX venture market, which of course is the microcap stocks in Canada. We are in a bit of a parabolic downward trend. That means the market's pretty oversold and due for a bounce back, but until we get a break of that downward trend line, I wouldn't get too optimistic about this market. There was a little bit of hope in the cannabis space, which is a dominant force on this market right now because of that purchase of an interest in CRON by Altria. That brings back that play on big companies buying these small cannabis companies, and that could be a boost for this market. We want to see a break of the downward trend, however, before we get too optimistic. Market analysis on the currencies. Let's take a look at the US dollar, which has been the dominant currency for some time. We've had that nice upward trend. We really had a low volatility week this week, but the upward trend is in place, and therefore you must remain bullish of the US dollar for now. Canadian dollar looks a little bit in the opposite way. We've got falling tops. That means pessimism on the Canadian dollar. We went through support during the week, but we actually clawed our way back just to barely close above support. But with that pessimism in place, I think you got to be fairly cautious about the Canadian dollar breaking through support. It doesn't have a long way to fall until the next level of support at about 72 there, something to keep an eye out for in the near term. Onto the interest rate market, and of course we had that major breakdown in the bond market maybe 2 months ago, indicating that interest rates were going to go higher. Well, we've had a reversal of that this week, quite a jump higher in the bond market, which means interest rates have fallen this week, and that's I would say an unexpected thing. A lot of the market thought interest rates were going up, but now there's concern that maybe the economy, especially globally, isn't as strong as thought, and therefore interest rates do not need to rise as much to take back that inflation fear. However, even though that sounds like it's good that interest rates aren't going higher, the fact is the economy appears to be weakening. That's what the bond market is telling us this week. So that could be that motivation for the stock market to break down through support and see more weakness. Now again, we're still in that bearish cycle because our falling tops are in place. We'll see if we can get more strength in the bond market, which means interest rates go even lower. Next week will be a critical week for that. On to commodities. And with that, weakness in the market and concerns about the future, we actually have seen now gold make a pretty bullish signal because it has broken up through resistance from a rising bottom. So there's our rising bottom. There was resistance there, a little pennant pattern. This week we close above that. That's a bullish signal for gold, indicating it likely will head up towards that resistance level. So I'm not much of a gold bug. I've never been too optimistic about gold in the last few years, but it looks like it wants to go higher here, and I think it might be time to nibble on some of those gold stocks as they show good chart patterns. Oil, well, you can't say the same for oil. It had a little bit of a bounce back this week, but it is still in that steep downward trend. At least it's showing some stability, and maybe next week we'll break. We had some cutbacks from OPEC. Perhaps that'll give the market a little bit of a boost next week. But until that downward trend is broken, you want to be pretty cautious with oil. So my ratings then, neutral long-term on U.S. stocks, but bearish short-term. I'm concerned that that support zone may get broken. Same can be said for the Canadian market. Gold, bullish on both time frames now. That is an upgrade. Oil, bearish long-term, neutral short-term. It did show a little bit of stability at the end of the week. The market has not responded well by the buyers' attempts to reverse weakness. It appears the buyers are weak and the sellers are just getting more motivated, setting up for what could be another big leg down if support, and that's the key, if support is broken next week. Gold is showing an optimistic break. Oil trying to stabilize, but it's still fragile, and so you want to be pretty cautious in the oil market. All right, let's look at a couple of stocks to watch. In this case, they're not all stocks. In fact, the first is an ETN, which is representing the VIX, the volatility index on the S&P 500 futures, and it has had quite a jump with the volatility in the market. This is a great vehicle to take advantage of market weakness. So we had a break of the downward trend 3 days ago. That was a buy signal, first one. We then came up to resistance. We're getting stuck there right now, building a little bit of a pennant pattern. But if you see this start to break out and the market pulling back, this is a good short-term vehicle, and I want to stress that, a good short-term trading vehicle if there is weakness in the market. So this is something to watch for. I wouldn't buy it until you get some confirming signal perhaps next week. Another interesting chart is, as I said, the gold chart is looking pretty good, and here's one of the gold companies, Barrick, breaking out of a cup and handle pattern. So there's your cup, there's your handle, and you're starting to break out of that. Volume wasn't real strong yet, but if we start to see an acceleration of buyer interest next week, we could see an end to this very long-term downward trend which has gripped the gold market and this stock in particular, and perhaps if there's turmoil in the markets, this will be a place to hide. Again, something to watch for if we do in fact get more corrective action in the market next week. All right, now the stock to watch, or the trade of the week rather. Trade of the week is one of my day trades from the past week. I do it as educational. It's really not meant to say you should do this on Monday. It's a trade that, fit my criteria last week using one of my strategies. In this case, it is my day trader strategy on the short side, which looks for action candles. That's the little gray dot there, which I have a plot for in TradeStation. The market rolled over on Friday around midday, and this is one of the stocks that went down. The trade here was to go short of AMD at 20.08. It finished the day at 19.46, which was a 4.5 RR trade, which means for every $1,000 risked, there was a $4,500 profit there. So that's a nice little day trade to take advantage of the weakness that we had into the close on Friday. If you want more information about my strategies, go to the trader education area of the Stockscores website. You can see those there. Well, I hope that you've enjoyed this week's Market Minutes. If you would like to subscribe to the channel, please do so. Click on that alarm button, the little alarm notification, so you'll get emails when I upload a new video. But most importantly, trade well.